listed on the bourses today. We now have the management joining us on the show. Mr. Shanil Sujit Bhayani, promoter and whole-time director at Sudeep Pharma, is now joining us. Thank you so much for taking your time out and joining us here on ET Now. And first up, let's talk about the IPO, which is OFS heavy, about 800 odd crores. How would you address investor concerns around limited capital infusion and promoter selling? What will your thoughts be on this?
I think if you see, right, from a primary raise perspective, we are coming off a Capex cycle in our core business. Therefore, I think the capital need in the business is not substantial. The primary raise that we're doing will go towards, again, a brownfield expansion for one of our key products, which is iron phosphate. Regarding the OFS, I think, it's the first liquidity event that we're doing as a family. And again, we had raised certain financing to buy out our partners, our German partners last year. And the OFS proceeds will predominantly go towards, repayment of that, which is why the OFS.
Got it. So that's about the OFS, but just wanted to understand more about your business. Now, given your leadership in food-grade iron phosphate and the ongoing 70 crore rupees Capex, how is demand trending across pharma and infant nutrition customers? What kind of a market share are you looking at? What gains are you targeting? And how do you see import-export mix margins changing over the next few years?
So I think iron phosphate, today we would probably be in the top 3-4 players globally, and I think what we are seeing is an increasing push globally by, say, World Food Program, UNICEF, even the government of India now looking at anemia as a critical nutritional challenge that several economies are facing, and I think there is a push to kind of how can we overcome malnutrition. A big part of that is iron supplementation, which can happen through a lot of the staples. So rice fortification, wheat flour fortification, these are basically used as vehicles by the governments to ensure that they're able to add nutritional value to the consumer's diet without the consumer really having to pay additionally for it. And that is a very large opportunity. Again, being in the top 3 globally would make us give a significant advantage in being competitive in this at a global scale.
And Mr. Bhayani, 75 crore of the fresh issue is towards capital expenditure at your Nandiseri facility. Can you tell us a little bit more about this capital expansion plan that you have and the Capex that you are looking to incur?
So I think one of our largest products is a product called iron phosphate, where we are also the largest in Asia today. And it's used as an iron source, again, for the nutrition industry. And the 75 crores will be put to use to increase the capacity of iron phosphate, again, to further strengthen our capabilities and our global reach in terms of the manufacturing capabilities for this product.
All right. Let's also talk about some of the categories that you're looking to go into. Now, you plan to expand into high-growth minerals for the EV and battery energy storage space, right? So what specific products are being developed, and when can they meaningfully contribute to your revenue?
So again, I think we were just talking about iron phosphate. We will also manufacture a battery-grade iron phosphate to support the lithium iron phosphate, or the LFP chemistry, for EVs and energy storage systems. Again, iron phosphate as a product is not new for the business. We've been making that at scale for the past 10 years. So we're leveraging that decade-old, the expertise in chemistry, the process, the engineering, the upstream supply chain, to really give the business a significant competitive advantage in being the first company outside of China to have a battery-grade iron phosphate product readily available. This will be commissioned or will be manufactured at a greenfield site, which will again come up in Gujarat, and will take 15 to 18 months to commission. So we will see revenue coming in from this business vertical, once the site is ready.
And Mr. Bhayani, let's also talk about client diversification then, because nearly top 5 clients contribute 30% of your total top line. What is the strategy to diversify your customer base, especially in regulated markets like the EU and US?
Necessarily see, I think, customer concentration or the revenue that the top 5 or the top 10 contribute as a pertinent risk to the business. I think within the customer, it's fairly well diversified in terms of the various applications that our products go into, even for within one customer. And there's also significant geographical diversification. So, as I said, I think going forward, there is no specific push to kind of reduce the concentration level. The goal really is to build depth in the relationships that we've built with these global customers and to scale with those guys.
All right, so that's about geographies, but now let's also talk about segments. Now, with pharma, food, nutrition contributing about 65% and specialty ingredients 35%, which vertical do you think is going to drive growth for you in the next 2 to 3 years? And how will this mix shift post the expansion and fundraise, especially since specialty ingredients is a new segment for you?
So I think great question. So specialty ingredients is a business vertical we only started in FY22, and in the last 3.5 years, it has grown significantly to become a third in terms of revenue contribution. I think it's grown approximately at a 30% or just over a 30% CAGR, and we foresee that this vertical will be the key dominant growth driver for the business, at least for the next few years. And we strongly believe that the CAGR of 30% is something that we can also sustain for this specific business vertical.
Understood. So that's as far as company's expansion plans are concerned. Mr. Bhayani, thank you so much for taking your time out and joining us here on ET Now. Remember, it was a good listing. This company listed at a 24% premium as compared to its issue price, and the stock now is trading with gains of nearly 29%. On that note, we need to slip into a very short break, but more news and updates will continue on the other side. We also have one more management joining us on the show. Don't go anywhere.